can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sand. Right now, I feel like 100 grand.
You are listening to Inspired Insider with your host, Dr. Jeremy Wise.
Dr. Jeremy Wise here, founder of InspiredInsider.com, where I talk with inspirational entrepreneurs and leaders. And Matthew, I have some interesting folks that you should check out, that people should check out other episodes. I had John Medved that started Our Crowd. And, oftentimes some of the investors, VCs, I like to ask what their biggest miss was. Because there's so many deals that come across your plate, you can't get them all. And he talked about early on, he had the opportunity to invest in Salesforce really early on, and he passed on it. And so Fabrice Grinda talks about his meeting with Snoop Dogg and some other rappers in his early venture. And now he does investing as well. And before I introduce today's guest, which I'm excited about, this episode is brought to you by Rise 25, which I co-founded with my business partner, John Corcoran. At Rise 25, we help businesses give to and connect their dream 100 relationships. And we do that by helping you run your podcast. And the number one thing, Matthew, in my life is relationships. And I'm always looking at a way to give to my best relationships. And a podcast over the past over 10 years has allowed me to profile others, their thought leadership, and really the people I admire, what they're doing in the universe. So if you have questions and you're thinking about starting a podcast, go to rise25.com and you can email support@rise25media.com. I'm super excited about today's guest. We have Matthew Merle. He's the co-founder and managing partner of Fifth Era and of Keiretsu Capital. And it's the most active early stage venture investors, backing almost 200 companies a year. They backed over 20 unicorns, including Airbnb, Spotify, Coinbase, and many more. Matthew's advised leading companies, including Amazon, Cisco, eBay, Google, HP, Microsoft, and even more than that on growth and innovation. And he's an expert in economic value creation. And Matthew, and I was reading about you, you even helped drive annual savings of over $2 billion at a leading retailer and $1 billion also at a leading bank. And it's just, when I do these intros, it's like I try and make them short, but if there's too many good things, it's hard for me to make them short. But you did all this with your wife while raising 5 children, which is a feat in itself. And people should check out the books you've written. There's one with you and Alison Davis, The Intelligent Investor, the Silicon Valley Practical Wisdom for Investors and Entrepreneurs from 50 leading Silicon Valley angels and venture capitalists. So Matthew, thanks for joining me.
Well, thanks for having me here, Jeremy. I'm looking forward to it.
What made you decide to write that book?
Well, so for us, this journey has gone from being consultants through to being investors and advisors. And that transition required a lot of learning. And we love it. We've been in Silicon Valley 35 years, and we just love being part of the innovation ecosystem. We love the passion and ambition of entrepreneurs. And as investors, we like the returns we get. But along the way, you learn things, and then you read other things, and you say, oh my gosh, I think I know some things that could be helpful to other people, but I'm not seeing it in some of the books and articles that are out there. And so Alice and I, took it upon ourselves to try and share what we'd learned. And that was the first book, Build Your Fortune in the Fifth Era, which really explains why we think the world is going through unprecedented times and provides a lot of opportunity to entrepreneurs and founders, as well as investors. It's sort of, why should you participate in early stage tech? And then this most recent book, The Intelligent Investor, it's, we thought that rather than write a book about what we've learned, we'd get 50 of the best VCs and angels to share their wisdom, and we'd put it all in one book. So you sort of get 50 books in one book. And I promise you, if you're an entrepreneur and if you're planning to raise capital from any of those 50 people, the least you should do is read. Yeah, exactly. The least you should do is read, because you'll learn so much about them and what their personal preferences are, and how they assess entrepreneurs and what it is they're looking from entrepreneurs. And I think you'll do a much better job of approaching them if you've read the book.
100%. What were some of the answers that stuck out to you? or people
Yeah.
in some of the answers?
Yeah, well, the macro point is this is really a people business, and we think it's a investment business, but this is not like real estate or public equities and private equity late stage where it's all about the numbers. This is really early stage investing, and it's about the people, and the best entrepreneurs understand how to create great teams, and the best investors are very good at partnering with those people, and they don't just bring capital, they bring expertise, and it becomes a partnership. And there's a lot more specificity around that point, but it's important to understand it. The best entrepreneurs know how to get the best out of their investors, and it's not just capital, it's everything else. And in the scheme of things, I know when you don't have any capital, it feels like it's all about fundraising. But actually, the moment you have capital, you realize it was never about the money. It's about having a team of people that are going to help you accomplish the vision you've set. And if you build a really good team of investors, advisors, coaches, experts, as well as employees and team members, your startup has a much higher probability of getting to the destination that you've established.
Yeah, it's all about the people, right? I mean, the people are running everything. I was talking with someone the other day, Matthew, and we were talking about early on, and they were a company that was seeking investment. And I was asking, how do you value a company when you don't have customers yet? And it's an idea. And he's like, well, an investor may have a very different answer to this because he was raising money. How do you, when someone's coming in with an idea, how are you valuing the company at the early stage? It's really
Yes.
difficult.
Well, it is really difficult, but I don't. It's less about a quantitative analysis of discounted cash flow. Which is based upon the business plan and the projections. It's more about a dialogue around a series of funding events that are going to take place over the first 2 or 3 years, a cap table, a capitalization table for the company, and a fair and equitable way of splitting up both the equity of the company and the work of the company, of which the capital that's going to be used is a component. And so we tend to have a dialogue with the entrepreneurs. You've got to have enough of the company for this to make sense to you. We're going to bring something to the table, capital and resources. And now we have to establish a cap table where we feel we're getting enough. And then we know the first round isn't the only round. So let's map that out. Round 2, round 3. What's happening for you in terms of dilution? What's happening to us in terms of dilution? And how do we make this work for the follow-on investors that also have to be part of the puzzle? And so I think that we see errors occurring all the time. One error is that entrepreneurs don't want to give away any of the company at the beginning, and then they can't attract investors. Another error is they give too much of the company away to their co-founders, and they don't have multi-year vesting. And that basically kills the deal because they get passive partners who own a lot of equity but aren't doing any work. And then no one else wants to come in later. These are examples, of course. So a sophisticated investor working with a good entrepreneur will map out a multi-year funding strategy, and then the valuation will be an output variable. It won't be the input variable.
It's really interesting, Matthew, because you're looking at, some people think you look in this finite point in time, but you're looking at like the entire picture because of your experience. And like, if we do this now, how's that going to affect all these future people who would want to come in? Is it desirable for them with helping of the growth of the company?
And the entrepreneur too. I mean, a smart entrepreneur knows that having an awful lot of nothing is nothing. And so you've got to figure out, I as the entrepreneur am going to give up certain things as time goes by. I'm going to give up ownership. I may have to give up control. I may need to also give up, operating responsibility and control, because I have to build a team and I have to trust other people to make decisions. All of these things are going to dynamically change over time. And, you as an entrepreneur if you're sophisticated, are going to map that out in your own mind. And as you say, Jeremy, it's going to be a 3 to 5 year thought process, not I'm here to do a round and I want the maximum possible valuation and the minimum possible capital, because that's not actually the right answer typically.
You have some really good questions with some of these rock star investors in your book. One of my favorites is about what they wanted to be as a child, and you kind of get this insight into some things. So for you, what was it like growing up, and what did you want to be?
Yes, well, it's a good question, Jeremy. So, you know, I made a decision at university that pushed me down a certain path. I decided to be a management consultant, and I joined McKinsey and Company. And I turned out to be good at it, though, you know, for many people, it's a challenging career. But because I was a good management consultant, I stayed in that profession for more than 20 years. And I was good at it. I enjoyed it. I got a lot of benefit from the experiences. You get a lot of diversity across industries and clients and geographies. I probably stayed a consultant longer than I should have in retrospect.
Why?
Why? Because I was enjoying it and I was good at it.
No, I mean, why do you think you
Oh,
stayed?
sorry.
Yeah.
Yes, because the world is full of opportunities and I'm enjoying what I'm doing today even more. And I probably could have started being a full-time investor earlier. And I tried to bridge from one career to the other in parallel. So I tried to do two things at once. Let's be a consultant and also let's be an investor. And I think I probably should have cut the ties to being an advisor a little earlier and jumped ship to being a full-time investor. You know, if I'd done that in the late 90s, when I could have done it, I would have caught the dot-com boom.
Right.
Alice and I ended up doing that a little later, but the great news is we're catching this boom, and we're well positioned for this boom. So that's, I guess, the answer to your question. If you ask me what other things might I have wanted to be, there was a time very early on I would have liked to be a professional athlete, and I did compete for many, many years. But I'm not sure I was ever quite good enough to be a professional, you know, in my sports. So.
It's a tough one. You know, I want to talk about first. We all remember our first, but before we do you have one, like I mentioned with John Medved and some of the others, a miss that looking, you know,
Yes.
Hindsight's always 2020, but like at the time it wasn't so obvious.
Yes. Well, many, actually, Jeremy, many. And in fact, I would quote Mike Moritz on this, the chairman of Sequoia and one of the world's best VCs. And Mike has said to us, and he said to other people, you know, it is the misses that keeps him up and up at night. And he worries more about why he didn't invest in something that went on to be successful, even though he's had a lot of great wins along the way. You know, missing something means that you were fishing in the right pond, to mix metaphors, right? You were fishing in the right pond and the fish were there and you happened not to catch the big fish, but you were in the right pond. So it comes with the territory. It's okay. So what are mine? I mean, there are so many, but I'll pick out two right now. One is Ethereum and another one is Ripple. So Blockchain Capital, where Alison is the chairman of the advisory board, and we are LPs in all of their funds. We love Blockchain Capital. Brad and Bart took me to a dinner with Vitalik Buterin right at the beginning, and he was looking for people to participate and support in Ethereum, and he was still ready to give out blocks of Ethereum at very low prices, and I didn't get it. And I really didn't get it at all at the time. I didn't know what a smart contract was, and I didn't understand what was wrong with Bitcoin, blockchain, and so on and so on. Today I do. So today I would have grabbed as many blocks from Vitalik as
we
I
could say
have.
blockchain co-investors like right over your shoulder there.
Yes.
Yeah.
So. Yeah. Well, we are the world's leading venture fund focused on blockchain. So that's one, Ethereum. And Ripple, our very, a good friend of ours, Greg Kidd, who we had backed back in the 90s with his partner, Linda Jenkinson, in the formation of Dispatch Management. He then went on with Jack Dorsey to create Twitter and Square. And he called us to a meeting at his home in Sausalito, where he wanted to talk about Ripple, but we didn't go.
Why?
Well, we had something else come up that evening, and
Mm.
we had 5 kids, and we had a lot of things on our plate.
That's
So,
understandable, Matthew. 5
yes,
kids trumps a lot of things.
yeah, but obviously, we probably wouldn't have been in on the formation of Ripple and XRP, but we could have added value early in its life cycle, and maybe we would have received blocks of XRP along the way, and who knows. So these are 2 examples, but Jeremy, the point is, you've got to be fishing in the right pond, and as an entrepreneur, that means you've got to be launching companies where the tailwinds are behind you. And for investors, it means you've got to be investing with the best investors and getting access to the best deal flow. So whichever you are, if you're in the right place, you will miss things, and that's absolutely fine.
Okay. That's I like that way of looking at it, Matthew. What's a good piece of advice that you've gotten from Michael Moritz? I was looking at your site, and he said, investing in young companies is a hazardous undertaking,
Yeah.
right? And where most people lose. And he says, Matthew suggests ways to avoid that fate. What's some advice that he's given you or from your conversations that's been valuable?
Yes. So Mike Moritz is a very sophisticated person, and he's a former journalist. That's how he began his career. And before that, he went to Christ Church, Oxford, which is where I was educated. Alison has met him a few times because she's actually been on boards with him. And in fact, Sequoia has had Alison, who is my partner, as well as my wife. He's had Alison, they've had Alison help with a couple of companies in the preparation and run up to the IPO, because Alison is a audit committee chair and a public company board director. So that's sort of the context. I don't want to pretend that I sit every day with Mike Moritz and we chat, but I've had the benefit of listening to him a few times. I think the blurb he wrote for our book, which is what you just quoted, is actually a very sophisticated way of giving us a blurb without endorsing the content of our book. Because what he's actually saying, if you read it, if you pass his blurb, it basically says you can lose all your money. And I don't know that Matthew has the answer, and Matthew and Alison have the answer either, because they suggest things, but he's not endorsing that our suggestions are good. So he's a very sophisticated guy. We were very appreciative that he wrote a blurb for the book. And that he read our book, but at the same time, I can tell he didn't actually endorse our book, but he did give us a blurb, and it's on the back cover of the book. And thank you very much, Mike, for doing that.
Yeah. Another thing. So one of the questions that I also love is you ask people, "What's your first technology investment and what happened?"
Yeah.
And it doesn't have to be your first, but what has been one of maybe first or most influential as far as early on investments for you?
Yeah, well, I'm happy. Well, okay, no, that's the way you asked the question. You changed my response. I was going to tell you a story of our first formal angel investment.
Okay.
But I'm not going to, because actually the better story goes way back, given the way you finished that question. When I was at McKinsey in New York, back in the the end of the 80s and the early 90s, I was doing projects which in retrospect were groundbreaking, but at the time, I don't think we understood just how much they would end up being so. So for example, I worked on a lot of projects at Sears, and Sears at the time owned Prodigy. And I was learning about Prodigy before anyone had heard about America Online. And of course, Prodigy lost, and American Online, at least in that phase, won. But because I had insights into how you could dial up and see a catalog online and how cool that was, which is sort of what Prodigy was. It was the Sears catalog online through an access point. It made us invest in America Online. And we were public investors because America Online had already IPO'd, but we rode America Online right through the 90s, and that was a tremendous returning investment. A second one I would mention is actually something called Catalina Marketing. And Catalina Marketing at the time, this is way back, 30 years ago, or something. Catalina Marketing allowed for the customized printing of coupons when you were checking out at the register at the grocery store. Right. So do you remember that? You went to the grocery store, you bought.
Oh yeah, totally.
Yeah, Safeway's print out your
Yeah,
receipt.
it's on the receipt, and you
exactly.
I just bought oatmeal. It's like, oh, next time you buy oatmeal, you get $1 off or something.
Well, it's a bit more targeted than that. It's like you just bought Pampers, and then they tell you can get something off baby food. So they are actually watching what you bought, and they're giving you a customized coupon. Well, the point is, that was my first realization of the power of one-on-one marketing at point of sale, real-time one-on-one marketing. And it meant that if I combine those two things, the understanding that the internet was going to give us access in ways that we couldn't imagine before, and the realization that targeted marketing in real time could be possible and unleashed by that connectivity and by the ability to do computing in real time based upon the clickstream activity or the behaviors of a user, that set us up very well for understanding why the internet was a lot more than just an electronic commerce platform. And as consultants, that was very helpful when we were launching or helping launch, say, a bankAmerica.com or a Gap.com, which I worked on. But for Alice and I, for our investing, it meant that we have invested, probably slightly ahead of the curve on the internet companies, including those like Amazon and Apple and Tencent and Alibaba that have risen to be the world's most valuable companies. We've understood what they were doing because of those very early experiences.
Yeah. I mean, you have this unique viewpoint of seeing so many different businesses and what they're doing in the businesses. By the time it comes to more the public, it's like some of those people are seeing it for the first time, and you're like, no, I've been kind of seeing parts of this for 5 years or 10 years. So to you, it makes sense. And I don't know if you consider yourself an early adopter, like you've seen the technologies maybe years before anyone else has seen it, right?
Yes. Well, you say me. I mean, I think part of why I think living in Silicon Valley in California is a privilege is because we see the future a little bit earlier than most people in the world. Now, we're not unique in that. You could be living in Beijing and Shanghai and Hong Kong, and you could be living in, Tokyo, and you could be living in Zug, Switzerland, or London, and those are also innovation hubs. And Austin, Texas is, and Boston is, and there are a few. But if you compare 8 billion people and where they live to where the world's future innovations are being created, relatively few of us live in the innovation hubs. And so I'm agreeing with your point, which is 35 years in Silicon Valley, you see things and you can connect dots that are a little bit harder for those people who are not living in an innovation setting. And of course, you can always watch the YouTube video. Right, 8 billion people can watch the video, but we're actually living in it. And even though we've all gone virtual, in this terrible pandemic, I still feel I'm a little bit more connected into this innovation ecosystem than many. We also make a lot more mistakes, which is going back to the point about fishing in the right pool. I'm living in the right pond in Silicon Valley. I also spend a lot of time in London and Zurich, Zug, and other places. So I'm living in the right ponds, but by definition, failure is part of that too. And I can show you all of the failures, and there have been many, but it just comes with the territory. So, I feel there's also that, Eurythmics song, better to have loved and lost than never to have loved at all. And I feel that better to have risked and lost than never to have risked at all.
Yeah. I mean, you ask people, I forgot who was talking about this, someone who's 80, 90, 100, and they're thinking about what they regret, not something that they did and then they missed out on because they did it.
Yes. Well, I think that's true too. Gandalf says it in Lord of the Rings, right? All we have to decide is how to spend the time that is allotted to us. And when we're living in this time of unprecedented innovation and change, I think that if we get to the end of our lives and we look back and said we didn't even try to participate in changing the world in the direction we wanted it to go, I think I, for one, would regret that. So I love working with entrepreneurs who are changing the world. And if I can help them and also sometimes steer them a little bit in the direction of the future that I want, then I think for myself and for my children and so on, then I think that is time well spent.
Matthew, we talked a little bit before we hit record about right now what you see with your unique viewpoint as emerging opportunities.
Yes. Well, it's the world is full of emerging opportunities because we are the luckiest humans that have ever lived. I mean, we sometimes lose sight of that because of things like a pandemic or global inequality or a lack of appreciation of diversity. There's a lot of things that get away, but fundamentally, we're living through a time of innovation and change where, for the most part, the world is getting better every day, and our lifespans, are for the most part lengthening. Poverty is, for the most part, getting diminished, and so on and so on. So there's a lot of positive things happen. Technology and innovation are the drivers of most of those positive things. That doesn't mean they don't have externalities and that they don't create disruptive change. And the disruptive change disadvantages some companies, some people, and even some geographies. There are whole regions that are getting disrupted, and they are unfortunately having to go through, some suffering in their transition to their new futures. But for humankind as a whole, I feel we're moving in a positive direction. So you say, well, what are the specifics of that? There's so many, but there's three I would call out. The first is we're continuing to transition towards a digital world. We're halfway in that process. The internet got us halfway, but now we have to complete the journey, which means digital monies, digital assets, and an internet of value as well as an internet of communication. The second is the life sciences revolution, where I'm a little bit less of an, engaged, but we are now moving into a world of personalized medicine and rapid health solutions. I mean, even the creation of the virus, the vaccines for this terrible pandemic that we're in has occurred faster than we could ever have imagined if we went back 10 years, and new technologies and tools are making that happen. I am a little fearful about the reality that we can not only genetically engineer plants and animals, but human beings too. And I don't know where that heads, and I have some fear around that. And then the third is, finally, we have clean sources of energy and of power and of business activity that I think will begin to mitigate the negative externalities of our progress. The big collateral damage of human progress has been felt by the earth and the world that we live in. And I think we're finally turning the corner where we can shrink our footprints, our carbon footprints, and our activity. And I think that that's a very positive thing. So for the entrepreneurs listening, Jeremy, I think those are the three big opportunity areas are essentially fintech and blockchain, life sciences, the continuation of what we've been doing, and clean energy. And then there are others as well, but those are the three big narratives, I think, of the next decade. And if you're an entrepreneur, I would pick at least one of those tailwinds and ride it. And you can probably combine two out of the three. I think if you can get a perfect trifecta, I'm not quite sure what it is, but there probably is a trifecta where you create a startup that benefits from all three of those macro trends, and that could be a good place to focus.
Yeah. Talk about the starting and running of Fifth Era.
Yes. So Fifth Era is Alison and my family office. And you can go to fifthera.com and learn about what we do. We called it Fifth Era because of this belief that the world is transitioning into a new phase of existence. And the first four began hunter-gatherer, agricultural, mercantile, and industrial. And the industrial era, we believe, is coming to an end. So you'll hear other people like the World's Economic Forum say we're moving into the next industrial revolution and that this is the fourth industrial revolution. We don't buy into that. We think we're moving out of the industrial era into a new era, and we don't know how to name it, so we called it the fifth era. But the point is, for 200 years, we've operated in a world where we take certain beliefs as gospel, beliefs like scale matters, and that you have to begin local and then go regional and then go global, and that the corporate structure, public corporate structure, is the right model. We have public entities, they issue stock, they have boards of directors, you're an employee, you work 48 hours a week in a place of work, you only have one employer at a time, and you get a pension. All these things we take for granted, but none of those need to be true. They weren't true more than 200 years ago, and they may not be true in the future either. And in fact, I think the evidence suggests that this fifth era is going to be very different. We'll multitask. We may get, who knows what will happen? We may get, working wages paid by our government, and anything we choose to do may be at our own volition, how we spend our time. And some of us will choose to work hard, and others may want to be artists or painters or podcasters or whatever. So we've written books on this, and I know that for some people, what I just said may sound confusing and so on. We've been pretty thoughtful about it. There are some books. There's a free book called The Fifth Era, which you can get at fifthera.com, and it just sort of establishes a foundation. Why is the world going to be very different going forward than it was in the past? And again, for entrepreneurs, I think you do very well to sit back and really think about this, because the knee-jerk reaction would be, look, I'm an entrepreneur, I'm going to do a seed round, I'll go and talk to my friends and family, and maybe I'll do an angel round. Well, you don't have to do any of that anymore. You can crowdfund, you can create a token, and you can issue a token to your fans. You can pre-sell. There's so many things you can do to fund your startup that weren't in place 10 years ago. The world is shifting. And should you create a enterprise, or should you create a project and a network and a community? Entrepreneurs are at the leading edge of this change, because you're creating a new enterprise to build out some new technology. And so you don't have to operate within the constraints of the industrial era anymore. And we think that's all pretty exciting.
Yeah. I think, you can correct me if I'm wrong, Matthew, but I think when you went out to demonstrate this to, to someone who kind of knows certain companies, and you're talking about industrial area, you kind of mapped out the world's largest companies by market cap, and it seemed like you showed the shift of like, okay, at the top was like the Exxons of the world, and then you started to slowly see the Microsoft and Apples and Googles shift in those top positions. Is that kind of, just to wrap the head around the fifth era, is that kind of where you see things transitioning? Is that what you mean by kind of industrial era to fifth era, or is that something different?
I think that's an indicator of the change, that the world's most valuable companies are companies that know how to operate in a very different environment, and they know how to serve global markets with technology and scale themselves very rapidly and become very profitable in doing that. But that isn't quite what we're talking about. That's an indicator.
Got it.
What we're talking about is, how does innovation and new technology undermine the assumptions upon which today's businesses and activities are founded? And so, an example, and I know we're running out of time, Jeremy, so we may end up having to do part one and part two, because I'm really enjoying your questions. But the university is a great example of a construct that we take for granted today, but the underlying foundation of the assumptions have all been knocked out. That knowledge is scarce, it's in the minds of professors. You have to go to visit them to learn, and you have to learn in a classroom. And so we have universities.
100%. Just
None
really
of those
quickly.
assumptions are true. None of those assumptions are true anymore. We
yeah.
no longer need universities. You could do electronic-based
Yeah.
learning, and it could be distributed, and 8 billion people could benefit from it. Sorry, Jeremy.
No, I want you to keep on with that stream of thought, because I really want to hear what you think should happen or will happen. But I just literally got off the phone an hour ago. The person's like, I wish they'd YouTube. I wouldn't have needed to get my MBA, is what they said. And it's kind of along those lines of, well, the information is out there. What do you think? Like, because there are still universities, right?
Sure.
And what do you think should be happening? And it's expensive. Like, for a normal human being, like, going to a university is not cheap,
Yes. Well, so I think the point of that narrative is that when you knock out the underlying assumptions, you get the chance to redesign things in a different way. So you can still call it university, but it should be cheaper, and technology should allow us to drive down the cost curve. So we shouldn't be bankrupting students in the educational process. We should be able to make it more accessible to hundreds of thousands and millions of people, not the couple of thousand that are able to arrive on campus and sit in dorms and sit in classrooms. We should be able to reverse the pedagogical methodology, so that hands-on experiences occur in the classroom, and the things that can be learned remotely are learned remotely. Whereas we've had this historical model where you get talked to in the classroom in a broadcast mode, and then you go and do the interactive work in case study groups outside the classroom. Well, maybe that should be reversed, where you do the broadcast communication through YouTube, and when you come to the classroom with the professor, you get hands-on tutoring and engagement, or something like that. I made that up. My only point of it is that the fundamental approach can be broken down. As an Oxford and a Stanford grad, I've greatly benefited from my educational experiences, but 8 billion people didn't. I was one of the lucky ones, right? I wish Oxford and Stanford would educate the world, not just educate the lucky ones.
Yeah.
Right. I'm fiercely pro, though. I'm a very loyal alumni of Oxford and Stanford. I just wish they would educate 8 billion people, not the handful of us that were lucky to go there.
Yeah.
Yeah.
I have one last question, Matthew, because we're running out of time, but I want to point people towards your website, Fifth Era, where, in Keiretsu, where else should we point people towards just to check out? I know you have a personal website, MatthewLemerle.com. Where else should we point people to online to check more out about what you're working on?
Yes. So listen, I know we're out of time today. I'm happy to do a part 2, Jeremy, but for the entrepreneurs, if you're trying to get smart about launching a company, there's some free resources at fifthera.com, including this book, and a bunch of webinars, including webinars on how to raise capital and the fundamentals of early stage technology investing. If they then want to raise money, I highly recommend they go to keiretsuforum.com. It's the world's largest angel group, and they love helping entrepreneurs launch their businesses. Blockchaincoinvestors.com is for investors. We're the world's leading venture fund of funds focused on fintech and blockchain. And as you and I spoke about, if there are investors in your organization and your network, blockchaincoinvestors.com is the place they should go.
Okay. So in the last couple minutes, Matthew, my last question is, your kids. What would you say what would they say? Would you say they would learn from you? Have they followed in your footsteps? And what have you think from talking to them been big lessons that they have learned from you? So
I think they've learned more from their mother than they have from me.
Well, let's go with mother then.
Yes. What they've learned, what I hope they've learned from their mother, and I'm sure they would say this, is being positive, being supportive of others, being relationship oriented, and trying to help other people succeed gets you a lot more personal satisfaction than always making it about you. And I've learned that from her as well. From me, I pride myself on being able to look a little bit over the horizon and trying to connect the dots of change in the environment in which I live. And I'd like to think I passed along some of that. But I'm sure there's a lot of less positive traits, including talking too much and not asking enough questions. I know nothing about Jeremy. I'd love to learn.
This is not about me. This was about you. I want to be the first one to thank you,
Yeah.
Matthew. Everyone should
Sure.
check out fifthair.com, keiretsuforum.com, and everywhere else on the internet. And thanks so much.
Thank you. And I look forward, if you're ever interested in doing part 2, I'm happy to.
Thanks, Matthew.
What I got, you can't buy. It resides between my eyes. Walked through the fire, came out better on the other side. See, life's like a beach if you find the sand. And right now, I feel like 100 grand.